Good morning, everyone, and happy Friday. My name is Holly Schoenfeld, and I am the Director of Marketing at U.S. Global Investors. We are thrilled to have you join us for today's webcast. Gold's next move, is your portfolio ready? We have an outstanding lineup of speakers today. Each will share their insights for about 10 minutes, give or take, followed by roughly 10 minutes at the end for closing remarks and a broader discussion. Please note, we will not be holding a live Q&A during this particular webcast. However, we welcome your thoughts and questions afterward. You can send those to info@usfunds.com. All right, so to kick things off, I am pleased to introduce Frank Holmes, CEO and CIO of US Global Investors. Frank has over 48 years of capital markets experience on the buy side and the sell side, from research, banking, and now fund management. Frank is also the co-founder and the executive chairman of Hive Digital Technologies. He is a published author, an award-winning financial blogger, and a highly respected voice in both fund management and metals and mining. And now I want to hand it over to Frank so he can introduce the rest of our panelists. Frank?
Thank you, Holly. And yes, go gold. What a time. Gold at making unprecedented highs in a world of concern. This is such a timely presentation to hopefully walk you through, and you this weekend feeling much more informed on this gold cycle we're in. But to make that really a rich presentation, I have an incredible lineup of people to share with you their insights, their uniqueness, and start off here with Jamie Brown. Jamie and I were just in Paraguay. Jamie Brown is a member of YPO. We're both YPOers, and he runs Canaccord's Western Division. His family started Canaccord, which is now the largest independent brokerage firm in Canada, with a global footprint in the US, which when he lived in Boston built out, and in the UK, especially in the asset management business, and Australia, and some of the other cities throughout Singapore, and they have a couple of thousand employees. So he keeps very busy, but they are the most dominant player in junior mining financing. And that's why I was so thoughtful to him to give his views of how he's seeing a catalyst, a change, because it's been a very weird cycle as gold has been going up. At the beginning of this year, the GDX, the biggest gold equity ETF, had nothing but redemptions, billions of dollars being redeemed. I've seen this in other ETFs that I own, that they would be up 40% and there'd be redemptions. So I was trying to understand what those dynamics, and it's interesting that seems the capital markets were frozen in financing, but not now. This summer has been lighting it up for the investment banking world, which Jamie's going to talk about. And then we have Bob Moriarty, who is famous for creating 321 Gold and having many comments, especially insightful and timely articles on junior mining, speculation, and also an individual that is not shy of his opinions regarding what he thinks is a promoter that has nothing but verbs and adjectives, but no noun. And he's looking for the noun. And so I've always have deep respect for his timeliness and insightfulness. And then the great Ralph Aldis, who's been at US Global before I purchased control in 1990. He has more degrees than a thermometer. And he's really understands walking a geology, walking over a deposit, going to speaking, and going and listening at all the major gold events around the world for the past 35 over 35 years from the buy side. And Rob's going to give you some of his micro cap stocks that he likes and why he likes them. And so let's start it off. First speaker, it's US Global. We're an investment advisor, ETFs and mutual funds. We're also known for putting our own capital into startups like the creation of Hive. And we have a concept called Smart Beta 2.0, which is a quant process for stock selections, which integrates both macro and micro factors. It has a dynamic reprocessing every quarter methodology of looking at it. That's what we do for ETFs. And it's just an overall very disciplined approach that has been a great way for us to manage fund flows. Now, before we get into stock ideas and real capital market formation, I want to talk about this issue on volatility because volatility changes over time. But what's interesting, you can look at this data over the past year. What is the DNA of volatility on a daily basis versus a 10-day basis for gold and the S&P 500? And you can see here they're the same. Um, the last big cycle we had a run up in gold and gold stocks were and bullion were two times the volatility of the S&P 500. And if you go back to 2006, they were three times. So we have seen gold become a more stable asset, but actually the number of investors in the last cycle went up to about an 8% weighting of all the ETFs that are listed in America. You can take a look at the GLD and put in the GDXJ and the GDX, and you can get an idea as asset allocators what portion were gold related. And it had grown in 2007 to something like 8% of that market, and it's been sub 1%. Now, we just recently had this summer a surge going into the GLD and some of the other ETFs. But what's important to recognize is that the volatility of gold bullion and S&P are both the same. But the venture exchange over 10 days starts to grow greater. If you look at the ETFs we have or other ones, they have a greater volatility to them. So that's why I think it's important to recognize an ASA over 10 days has even a greater volatility. Gold all-time high. ATH, as the social media young whippersnappers like to call it. They love these acronyms, and right now we're seeing ATH and we're seeing overbought, and it's a bubble. It's amazing for me to see and listen to and read so many people that have PhDs in bubbleology. And I would share with you that short term, it can have a correction. Would it be great for gold? But stock them, buy them, because we're in a longer term cycle, because we've not seen where the overall market has grown to 8% as gold and gold related investments, sort of the QQQs and the S&P indexes that are out there. So we are actually still in early innings as gold makes an all-time high. And I'm going to try to explain what my opinions are that are driving that. This is another visual that shocks a lot of our registered investment advisors. When I share with them that gold has been positive more than 80% of the time this century, and it doesn't matter if it's a Democrat or Republican president, it really doesn't matter. And that gold having a diversification is just rational intelligent, and to have it in gold stocks. So this is the data most recent, and it shows that 88% of the time gold has increased this century. Now, I have a feeling, I'll explain to you in a few seconds of why I think that, but what's important here is that gold has outperformed this century the S&P 500, even with all the AI boom we're witnessing now and the concentration of wealth going into the NVIDIAs, etc. Gold has been an incredible investment to have in a diversified portfolio. But people are deeply under invested, except for very smart hedge funds like Ray Dalio. Why is this? My theory is it's MMT, modern monetary theory, really took off when China became part of the WTO, the World Trade Organization, and they started this huge growth in the world, and countries started using modern monetary theory, using monetary aggregates to stimulate their economy, and a lot of it was going for social agendas, and therefore it was destruction of the fiat currency. And the MMT has not gone away. COVID was a classic of where it exploded. That was the first lever that was put out there, MMT. Taxes didn't drop, but MMT exploded. And then they're trying to buy back some of this monetary aggregate. But it just shows that every cycle for economic growth, they need more and more MMT to ignite it, not smarter, better fiscal policies, but monetary policies, which leads to currency debasement, which leads to assets like gold are really critical as an alternative asset class for any portfolio. So gold stocks now, this started in late spring, early summer, which I like to follow as Investor Business Daily. It follows momentum and is agnostic to industry, and is usually dominated with tech, biotech, fintech stocks that have this momentum in revenue, Q over Q, year over year, momentum in earnings, Q over Q and year over year, and some institutional increasing their position in this industry. And it really is a positive because in 2005, all of a sudden we started seeing stocks. Back then, it was Gold taking over Wheaton River, and all of a sudden they started showing up in the IBD. Now, why is this important? Because you have a much bigger audience of investors. The ecosystem, when stocks show up in IBD, is much bigger than gold-focused investors. And when gold stocks start to show up in this, all of a sudden, generalists, momentum players start buying gold stocks. And you can see the volume in Newmont and Barrick. They have gone through a huge expansion over the past year. And what we have seen as a stock shows up in IBD, like Goldfields, all of a sudden this volume expands. Triple Flags, which is the newest royalty company of size, has came out just before COVID, and we were a seed investor in the launching of Triple Flag. It's all of a sudden torquing with this big growth in revenue and cash flow. Agnico Eagle, Kinross, Harmony. So I think it's really important to recognize that this is early innings. This is a super cycle because MMT is not going away. And we know that when we look globally, what percentage of the world debt? I'm going to come back to that after we have some comments with Jamie Brown and Bob Moriarty, and I'm going to come back on some of the macro forces that are driving this sustaining rise of debt and currency devaluations globally. So now I'd like to turn it over to Jamie Brown to explain the creative nuances and how capital is being formed for mining today.
Thanks, Frank, and great to be with our friends at US Global. And I'd like to give you a shout out for being a great friend, a client, and a mentor to me personally. So I'm happy to participate today. We do believe we're in a secular bull market, no question. The great debasement trade or de-dollarization you heard a lot about in the headlines is rippling through these markets. And we do measure things like the ETF, which Frank had referred to earlier in terms of redemptions, 21, 22, 23, but in 25, we have seen 6 times the anticipated inflow to ETFs. So it's setting up to be, a very robust capital markets. We've managed to raise close to $1.8 billion year to date, 50 transactions in Canada alone. I think 80% of all of our new issue business has been mining and metals and dominated by precious metals. And I think the staggering thing that you can note on this slide is just the free cash flow metric, and the multiples still have room to expand. Typically, we see 10 times next year's free cash flow, and we're only at 8 times. So there is room. People say we're overbought, but particularly in the intermediates, the next ladder down, we think there's real value in the intermediates and the juniors. And if you look at the free cash flow, and nothing excites investors more than free cash flow. I'm just from the top: Newmont, 6.8 billion free cash flow; Agnico, 3.6; Barrick, 2.7 billion; Kinross, 1.9 billion; Endeavour Mining, 1 billion; and the juniors, Lundin Gold, 715 million. So it's got the attention of the institutional buy-side generalist funds who are still underweight. And what we've seen in the last couple months is pretty exciting for the juniors, because some household names and specialty funds are coming down market and funding explorers. We've seen the senior producers, the intermediates come to market. The developers have been able to access capital, and now the juniors. And I get my hat off to the BC and Ontario Securities Commission for coming up with an important exemption called the LIFE instrument, and it stands for Listed Issuer Financial Exemption. And that allows issuers to raise money and issue a free trading instrument without a prospectus, up to 20% of the market cap with a cap of 50 million. And we've been extremely active, and it's great to see that money going back in the ground. And there's tens of thousands of meters of very good projects with good management teams. Next slide, please.
Jamie, I'd just like to
Yeah,
compliment that, because one of the things
yeah,
was that Newmont has been taking their free cash flow and,
yeah.
buying back their stock at a very rapid rate and not really investing in juniors after digesting the last big acquisition. And
Mhm.
and that's unheard of. That's what you expect from consumer product companies in the US and financial companies
Yes.
buying back their stock. So it is really fascinating to see. But you're sharing with us that now these big beasts here are investing in the juniors.
Yes, no, M&A activity is increasing at a rapid pace. And here's some examples of recent transactions. The highlight one being Equinox and Caliber was one of the larger transactions. M&A side, we acted for Caliber in that transaction, and it's traded well post merger. And our pipeline is really strong, not only in the M&A side of things, but in the IPOs, in fact. So I don't know if you saw last month in September on the Hong Kong exchange, a Chinese producer called Xinjiang came to market with a $3.2 billion IPO. So, the ducks are quacking, so to speak. And sure, we might have some consolidation pullback, but, we think the long-term fundamentals are right through to 2030. Some of our competitors are forecasting 5,000 an ounce. We're modeling 4,500 at the moment. And, this is a long-term secular bull market,
But it's
which feel
not frothy in this space compared to how much gold has risen. Like we've seen in other
that's right.
cycles, for gold to go up 60% over
Yeah,
12 months, it would be huge fund flows coming into mutual funds and ETFs
yeah,
that are
yeah.
equity bound. You're not seeing that as
Yeah.
of yet. So we're still early, would you say?
I'd say we're still early to mid innings. Yeah. And you've got guys like Ray Dalio, who was highlighted previously in this conversation, who are now suggesting weighting should be 10 to 15% gold or gold equities in everybody's portfolio. And, it used to be 5% weighting was kind of the standard consideration, but now we're looking at a whole new rebalancing. And as I mentioned, the generalist funds and the household U.S. institutions coming down market to get more weighting and exposure. So yeah, year to date, 8.3 billion for the materials sector. That's where the action is. We have seen an IPO market get traction in the U.S. through digital assets, primarily AI and SaaS continues to be the flavor in the U.S. And it's interesting that I mentioned digital assets because we have a whole new buyer in the market with these crypto stable coins that are backed by the U.S. dollar, but more increasingly gold, physical gold. So there's a company called Tether, folks might know, is now holding 250,000 ounces. They have a vault in Switzerland that can hold up to $10 billion worth of gold. And they have an open order every Monday morning to buy $250 million worth of physical gold. And so we're seeing the convergence of digital assets and gold intersect here in a really exciting way. I know that's another sector, Frank, you and I have been very active in. So,
And interesting enough, Tether is also one of the biggest buyers of US dollars for their money fund,
correct.
right?
Yes.
And
Yeah.
they have more US dollars than Germany, and they balance that with owning gold. So they have a
Yeah.
gold stable coin and they have a US dollar stable coin, and no one in America and no one in Europe can buy it. So anyone that has any economics in Latin America, Asia, and
Hmm.
Africa, they're the ones who are buying the Tether stable coins.
Yeah. Yeah. Whole new buyer. And I'll just wrap up a snapshot there just on where the capital's been raised in 24. It was 45% materials this year, a little bit more balanced, but still materials, primarily precious metals and base metals dominating the capital raise activity, and don't see any signs of slowing down. The world needs more copper. Obviously, the precious metals trade is the most relevant, but we're active in uranium and critical minerals. So it's an exciting time for Canadian capital markets. It's what we do best as Canadians. We're great at mining. We're great at mining finance, and we're having a moment here. So we're having fun.
Well, thank you. Thank you. Now I'd like to turn over to Bob, uh, an incredible individual. I just think of as a war hero, and he's famous pilot for that he flew his. You can see his. What's that plane, Bob? A Cessna.
No, I'd say Beechcraft V-35.
And he flew that underneath the Eiffel Tower. They've now made that illegal to do, but
Now it was illegal then.
and so he's a real entrepreneur. Besides serving America and being a hero in his dedication and service to the country, I thank you. And so, Bob, tell us. You had one of the, well, you still do, the prominent website that people go to learn about gold mining and junior and articles on gold. What are you seeing?
Well, this is nothing short of incredible. I view physical gold and silver as an insurance policy against financial chaos. Back in 1999, someone wrote and said you should own the percentage of gold that you believe the danger to the financial system. So if you think there's a 50% chance of the financial system collapsing, you should own 50% gold. And I listened to that and it made sense. So I put 100% of my investment income into resource stocks. Now, certainly, gold and silver have served well over the last few years. In the last 6 months, gold climbed over 30%, while silver shot up 70%. Now, I'm a contrarian. I pay attention to sentiment. The bullish sentiment on the metals is the highest it's been since 2011. The DSI, the Daily Sentiment Indicator for both gold and silver, measures 89 today. That does not mark top, but it does seem to me to indicate the metals would like to take a breather. The number of daily visitors to 321 Gold has also doubled in the last 6 months, but it's still only half of what it was in 2011. The metals serve as a barometer and a thermometer for the condition of the financial system of the world. I believe the metals are saying the everything bubble is in deep trouble. A week ago, we had a flash crash in crypto. That plunge in 30 minutes wiped out $5 billion held in the accounts of individuals using leverage to purchase the cryptocurrencies. In the past week, we've had 2 major bankruptcies, one in the automobile subprime lending and another in basic auto parts. It looks as if there was fraud in both cases, with the companies pledging their assets to multiple banks at the same time. Rehypothecation fraud is like someone throwing a tennis racket. It never happens just once. The reverse repo market in the U.S. is sending a signal that liquidity is shrinking. Regional banks took a 6% dive in one day yesterday. If we have another flash crash in the stock market, the margin clerk's going to be on the phone. Everything will be sold off. Gold and silver have not gone as high as they will go one day soon, but both prudence and sentiment suggest taking some money off the table in anticipation of a possible correction. No one ever went broke taking a profit.
Thank you, Bob. And this is another visual looking at all the metals, and you comment not just on gold and silver. You have articles on copper and some of the strategic metals. Are you seeing interest in those?
Well, I own part of the largest mine in Bolivia, and it is a silver, lead, zinc producer. So I pay attention to both lead and zinc. There is certainly interest in the other metals, but the reason for this chart, and it's a very important chart, you can go back to 1930 and you can track 8 different metals. You've got copper, you've got lead, you've got zinc, you've got silver, you've got gold, you've got aluminum, and something else. Gold and silver have actually gone up more in every 10-year time frame. Now, the amazing thing to me is in 1929, 29% of the Dow Jones was in mining stocks, and I think it's something under 3% today. So the growth potential is enormous, but I would certainly caution my readers and my listeners, we are in a very, very, very dangerous market. This is not a market you want to be leveraged in.
And Bob, you talked about, and we were early on when we launched our Smart Beta Gold Royalty Go AU ETF in 2019 because it has a focus on the free cash flow. I think that's a big reason why. And you follow the royalty companies.
Well, they're strange enough. You came to me. We talked about this, and I thought you were giving me a Christmas present. That's one of the easiest calls I've ever made.
That's great. All right. Well, thank you so much for that. And so basically, we are not back on sentiment data like we were in 2011. We're still 50% away from sentiment where people are going to the website to learn more, but it's doubled from the lows 6 months ago. So that's the first lift. And gold has made all-time highs, but the sentiment is not like it's been on previous gold cycles. So for me, that means that we have more upside. And that's why I like to get the opinions of what Jamie Brown's firm, who's a leader in that, and Bob's website is a leader in that, how they're seeing things. Are they overbought on deal size, the number of deals being done? I don't think so. And is it overbought on sentiment? I don't think so, as gold is skied to all-time highs. So let's try to put this in context. And I think short term, it could easily correct because it's overbought on many factors. But you don't want to just walk away from it. We have much more to go, and there's reasons for that with MMT. But now I'm going to turn over to Ralph, and he's going to sort of give you an idea of comparing different sectors like tech to gold, and then his gold stocks. Ralph?
Yeah, and this is a very interesting chart. I mean, it just kind of shows you on terms of gold. Do you have me turned on for the bottom there, Holly?
It's all perfect,
You
Ralph.
sound great.
Okay, you can hear me. Okay, good. I saw it. I saw the mute button up there. I thought maybe I was back on mute there. But no, this is really interesting. I mean, you look at these stocks right here, 26.32 trillion, and you look at what's the world's most valuable asset right there, gold. It's I don't think gold's going to cede this world to anything else anytime soon. But go ahead and hit the next slide there, Holly, for me. And Frank, this one really is more like, this are the two dominant drivers of gold out here to some extent. The fear trade is what everybody thinks about, but the love trade is what actually helps make the market in gold, because you have distress right now, you have fear, and gold's a very significant asset. What's kind of interesting right now, the sales in India that they're going on right now, even though the price is high, the sales are actually still very strong. And that tells you that they probably think, the Indians have always been very price sensitive, and that tells you that they see prices going higher too, most likely. So
Just to
that's kind of the thing.
To complement
Go
Ralph's
ahead, Frank.
comments, is that Indian women wear 6 times the amount of gold that's in Fort Knox, and gold in rupee terms is making all-time high. So they believe that for wedding season, for birthdays, etc., you give 24 karat gold, and each area community has a different design, but it's all 24 karat and all easy to be melted down for a new design. And it's now the largest population in the world, and it is a rising GDP per capita. So our research showed that the GDP per capita this century for China and India has been growing faster than the EU, the formation of the EU and America. If you look at GDP per capita and the correlation to love trade, buying gold jewelry, for more than 40% of the world's population is extremely high. So what does that mean? Any big sell down, they come in and buy. It's a natural bid. Now, all-time highs, it predominantly comes from something fearful out there in the economy, over-leveraged economy, that all of a sudden gold starts becoming an important, or currency devaluation with war. I think I'm going to jump, Ralph, and take the next view and come back to you.
Go ahead, let's do that.
But this is just showing gold in other currencies. So gold in Chinese yuan and rupee. Why do I show yuan and rupee? Because those two countries are 40% of the world's population, and they both have a deep cultural phenomena towards gold. The fear trade is China has basically been told by Saudi Arabia that if we're going to take renminbi for oil, that you have to have more gold to back your currency. And so you're seeing the Chinese have, in the past decade, continuing to accelerate and be the biggest gold buyer, but they're still far away from the amount of gold the US owns. And so this is, to me, is most interesting as a buyer, is predominantly out of that fear trade. Next one, yeah. A debt. So national debt of the US, everyone in America likes to talk about, and it is. I watched some other people making comments, but when you leave America, you find out that everyone wants the US dollar. And that's the most interesting part. The most critical people of the US dollar and the Federal Reserve are Americans. But outside, they want to trade. So when you're in Africa or Latin America, it's US dollar bills. Argentina has been able to survive this century because in 2002, they confiscated all US dollar bank accounts, all US dollars, and there's no foreign currency trade until all of a sudden Malay came in. They would buy your dollars from you at the banks, but they would never give you, they give you back pesos at an official rate. And when I was there 18 months ago, it was 300, but on the street, a dollar's worth 900. So you've seen, and I talked to the ambassador of the US ambassador in Argentina 2 years ago, and he was sharing with me that it's estimated $25 billion US dollars are in the mattresses and pillows in Argentina, because that's why Buenos Aires is clean and spotless, and everyone trades on US dollars. And that led to what Jamie Brown was talking about earlier, is Tether. Tether tapped into that with a stable coin where they keep the yield that's paid on short-term government bonds, and they provide a digital money. And Tether has over 300 million, the population of America, on average 4,000 US dollars in a digital stable coin outside of the reach of the banking government system to protect against confiscation. And this happened all through East Africa. So when you take a look at this national debt, one thing is to be critical what the US is, and rightfully so, hold people accountable, responsible for your tax dollars. But the rest of the world with MMT is unprecedented. So the implied investor allocation of gold, as I show you here, is so low. You see it got up to 8%. And even though gold's making all-time highs, people are still not believing that gold is an important diversification, except when you come to smart people like Ray Dalio. What I've seen in my global travels and being in the data center business also is OPEC was created in the 70s, and the charge was Saudi Arabia. They created this monopoly, OPEC. And China is basically created the OPEC of metals and minerals with BRICS. And they're doing that to assault the US dollar, the US currency as the dominant trade in the world. So we have been going on since 2012 when Xi Jinping became the dictator for life. You've even had this stealth battle of trying to undermine the dollar. What we've seen of the data points is that Saudi Arabia takes renminbi, but they immediately convert the dollars to buy jets. And so you see that trade, but who's really been hurt the most in that trade has been the EU currency. But overall, how foreign banks keeping dollars as a foreign reserve, that's been under pressure. And it's a simple reason why. Because it's a brilliant idea, but it's treacherous. It's a Trojan horse. One road, one belt, Marco Polo vision by Xi Jinping was to go to export their caterpillars and tractors and Chinese workers to build seaports and mining facilities all over the world. Well, with that came these loans, came attachments, and that you couldn't trade with Taiwan, and then you couldn't do this, and then now it's you can't have US dollars for trade. So they're doing everything to do that, and they've invested over $1 trillion in 140 countries. Well, how big is the UN? That's just under 200 countries. So you mean that China's invested over $1 trillion of their equipment, and they've bought over 100 seaports around the world? And this whole assault is not missiles. It has been trade in dollars. And we're seeing those ramifications show up that many central banks are saying, you know what, there's this big battle with China and America. Let's best turn around to have gold as the protection against currency devaluation with MMT globally. And now we have this trade war. So the trade war you're seeing with Trump is really started, it was with Biden and it was a bit with Obama, but it gets accelerated with Trump because this is just his way. But it's really, the tariff war is really to push back against China. And any country that wants to align with China is aligned against America. And that's what we live with right now. How it would unfold, I don't know. But the gold market is telling you it's going to be currency debasement. It's going to be currency devaluation. That's what the gold market is telling us. And I think that that's what's important to look at. Look at BRICS as being OPEC. Think of back in the 70s when we had deflation. And back then, gold went from $35.71 up to $800 by 79 going into 1980. So you had this big run and you had a couple big corrections during that run. And so I think we're seeing that it's different today. It's not oil, it's strategic metals. And now China would like to be able to control the gold market and dominate. They've gone from price takers to price makers. Very important what their long-term strategy has been. So these are the characters. They're all aligned. And what you see, Putin invades Ukraine. But then this wonderful, good-looking guy on the far left side is sending soldiers from North Korea to help him fight against Ukraine, to fight against NATO. And so is China helping with weapons. And over here is Iran, another troublemaker. So you can see Maduro is pro-Hamas, pro-Hezbollah, anything that's anti-America, and is probably, the richest of them all is a narco trade. $50 million is what he makes in a week. That they're trying to go after him. But these characters keep showing up, and they just create a disorder. And the more they create a disorder, people want a rudder and make sure the ballast in the sailboat that doesn't tip over, then they want to have gold. And that's what I'm seeing when I'm traveling globally and talking to different investors. So gold miners, thank God, we love this, don't we, Ralph? It's just crushing the market.
Yes.
And same with you, Bob and Jamie. You know, money is going into the sector for the first time. The supply of gold coming on from new discoveries. What Pierre Lassonde said, that when I first got in the industry, it used to be 5 to 7 years from the date of discovery to the gold mine was producing in Canada and the US, and now it's 30 years. So how many people are going to be around for 30 years on that life cycle? They don't play that game. When you do a loan for a gold mine, it's a 10-year loan. Everything's off a 10-year. So if you can't get your mine from discovery into production under 10 years, it becomes more challenging to fund unless you have a very rich deposit or you have a very easy deposit. So most of the deposits that are easy have been found. Most of the deposits that are easy to get to or very rich have been found. So now it's going to be more difficult projects, more difficult countries. And if that cycle in North America doesn't shrink the life cycle of a mine, we're going to continue to see that. And we've seen this with strategic minerals. We've seen now that China with rare earths having 70%, what they do with that to try to use that for a trade war. Just like they try to do with oil to get the price of oil up. So managing supply is important, but gold is much more decentralized and free markets driven. So that fact is that the lack of new gold coming on stream and the increase in money printing means that gold is going to trade higher. That's in my opinion. And the gold stocks are much more disciplined in how they're managing their capital. There's much better governance by boards of directors. Would you agree with that, with Jamie?
Entirely. Yeah, whole new discipline.
And so Ralph is going to all these conferences, and I want him to come back and talk about some of the names he owns. Ralph, why do you like them?
Yeah. Well, I'll give you maybe a couple sentences on each one of these guys right here in terms of why we're there and why we own them. And honestly, for all of these right here, yes, all of them are going to potential takeout opportunities. So that's not the only reason I own them. I own them because they're high quality and we got good management teams behind these things. And that's what's really important in terms of, the derived value. Now, for silver exposure, Vizsla Silver is my top holding right there. And there's two holdings out there on Vizsla. There's Vizsla Silver, and they also did what Great Bear did. They spun out a royalty like Great Bear royalties. There's also a Vizsla Silver royalties out there that's listed. We own both of them, and so it would be much like when Great Bear got taken out. Eventually that royalty also got taken out too. So I think that Vizsla Silver is a good opportunity in the larger silver space because silver deposits are very rare to get more pure silvers. And we've had Silvercrest disappear with Coeur a year or two ago. We've had Mag Silver being taken out by Pan American. So I think this one is potentially, it fits the size. And if you want to step down lower in market cap on silver, it's not on the list, but Capitan Mining or Capitan Silver is another one to look at. TriStar Gold, this one, their project is fully permitted. That happened this past year. And then a prosecutor in another part of Brazil, another state, filed things saying, against indigenous people, we need to look at the indigenous people here. I've been to site. It's farmland. I mean, and all the provinces, they basically, or the state that it's in, they basically have gone to court. The stuff is being heard. If this Herd lawsuit gets pushed back, this thing is free and open, and you've got a fully permitted project shovel ready in Brazil, which is a good mining jurisdiction for building a mine. If you want to step into Canada right here, one of my bigger holdings in the gold space on the exploration side is Radisson Mining right there. Radisson, they have currently right now about a 1 million ounce resource that's at basically about 9.42 grams per ton.
That's very high grade.
Yeah, and they just recently completed a capital raise, and they're going to test the depth of this deposit down to 2 kilometers. And we've seen for many other gold deposits around Canada, these things typically have roots. And so I think Radisson is a very good one to potentially look at right there. And on the TriStar, one other thing I was going to mention on TriStar right here, the team behind TriStar, that was Mark Jones, and they created Crown Resources back in the early 2000s. They sold it to Kinross in 2006. Then they went back and they basically discovered Tocantinzinho in Brazil. They sold that to Eldorado Mining. Eldorado Mining fully permitted that, and you know what happened next? G Mining bought it, and that project is in production, and it's a great project. This is the same team that found those other deposits. I expect this permitting thing to go away in terms of the little challenge, and I think this thing will eventually get bought out right here. Other companies that are in that exploration mix that are very attractive, Oh My Gold Mines, they recently completed a $30 million financing on the back of their latest resource update of 6.5 million ounces at just under 2 grams per ton. And this is in Guyana. This is a good mining jurisdiction. This financing, they're going to continue to drill and grow the size of the deposit. Serious investors are paying attention to this deposit because it's in a good jurisdiction. It's unencumbered with royalties. This is a nice one. Another company, G2 Goldfields, which is also in Guyana. Now you saw me mention G Mining a while ago. They have the Oklo deposit in Guyana. G2 Goldfields has the Okla, I guess you call it the Okla West deposit or something, because there's just a property boundary down the middle of the deposit. And then and G Mining has one half of it, and then G2 Goldfields has the other half. G2 Goldfields had a big block, well, Anglo Ashanti had a big block of this stock. They cleared out for them. Reason being, they weren't going to go core with the property, but G2 Goldfields is going to they're going through an auction process this quarter. They're going to sell the asset. And I don't know whether it'll be G Mining going after it or what, but the asset's going to get sold in terms of quality, and they're spinning out G3 Mining, another spin out of other properties there in Guyana. So I think you're going to have, you'll have a takeout probably this quarter or the sale of the asset. You'll have a new spin out and a good jurisdiction, and you'll be ready to hopefully catch the next wave right here. But that's the thing though right now is, we haven't seen a ton of acquisitions. We are seeing some in the junior space. The one that I would mention is Loncore, which is on that list. They just recently got an acquisition announcement this week from a Chinese, I think, and they're in the DRC. And yeah, that can be a tough jurisdiction, but not for the Chinese in the DRC. So Loncore is one it's already happened. The buy is there now. Other teams right here, K92 Mining. These guys, they just completed they just basically got the stage 3 plant, and they've got they produce commercial grade gold, copper, silver concentrates. And then the plan is going to wrap up more in the first quarter this year. What I'm talking about, you're talking about a growing production profile for a gold mining company. And that is very important for creating value. And so this is one that I think eventually will get taken out. It's been under pressure because people in the second and the third quarter, people thought, I'm worried. It's going to do better. And a couple of names I heard last on the gold side, or the second last on the gold side. You got Montage Gold. What I would say about that, Montage Gold is one of the Lundin group of people. Rick Clark, the CEO. Me and Frank have known Rick Clark for more than 30 years. He has had a very successful track record. They were the ones that put Redback Mining into production, got it taken out by Kinross. And they know what they're doing. Their project, the main project, is in Cote d'Ivoire, the Ivory Coast, one of the most stable West African jurisdictions. And they know that region like the back of their hand for operating in West Africa. They'll end up being like the new Endeavour Mining of West Africa, most likely. And then the other gold stock I would mention here is Black Cat Syndicate. These guys are in production. They've been in production for 2 quarters now. And they're in Australia. If you go out and you look for coverage, you won't find any because they had the money themselves and they did it all themselves. They didn't have the street basically raise the money. So that's why there's no coverage out there. But it's a great deposit when I compare it to other similar deposits. I'm I'm already up 100% on it, but I'm looking for another 100% right now on this stock over as we go through this period right here, particularly with the new project ramping up. That can make them a target. The last thing I would mention right here is what I would call Nano One, and they're working with the other silver at lithium, but they don't have exposure to lithium metal prices. This is something 4 or 5 years ago when lithium was just becoming hot, we ran across this stock. They have unique technology for growing lithium cathode, which I recognize because of my mineralogy background and what they were doing. And subsequent to them, last year, RTZ, one of the major mining companies in the world, came in and bought a 4% stake in it. In February, March this year, Sumitomo Metals and Mining, a big major Japanese mining company, they bought 5% of the company. And you probably heard in the past week or two where Trump was limiting rare earth technology exports. He also put limits on lithium ion battery technology exports. And Nano One is the only company in this Western Hemisphere that has a fully operational LFP plant for making batteries. And RTZ recognizes that, Sumitomo recognizes that. There's your opportunity.
That's great, Ralph. I just add to people, I was just Jamie and I were in Paraguay and we were visiting data centers, and we went to visit the largest company for mobile, and you go through their tier 3 data center, and they always have to have backup batteries and backup sources of energy in case something happens to the normal source of hydroelectricity. And that's what makes HPC, high performance computing, so expensive, is all the HVAC, all the backup support you have to have, because it can never go down. Well, you went in one room and it's on the backup and you could smell the lead batteries. You could smell the acid, the mix. And you went out and you could go into the next room and they have the new lithium batteries. You smell nothing. It was just so distinct, because I remember the smell as a kid in the old Buick we used to own in the 60s, and you'd open up that hood and you could really smell the battery, and so lithium has so many uses. So the big boom in technology for data centers, well, the backup is going to be, as Ralph said, lithium batteries, and that's all relates. So foreign central banks hold more gold than treasuries. That's what I tried to mention earlier, is this fear trade, is central banks are fearful of the fight that China's been using one road, one belt. And I think it's also important to recognize that democratic nations have fallen into an all-time low. Only 30% of the world's population are run by democratic countries. And so as one belt, one road model of over $1 trillion in over 140 countries, they support dictators. That is the Chinese model, or autocratic systems. And so that fact, that's what they support. You've seen a drop in democracies and freedoms. The most evident and easiest to see is Venezuela. So other central banks become concerned in the battle, and they're going to gold. And so then we see the gold stocks are ripping relative. And if you hadn't had a 10% weighting, you're going to underperform your diversified portfolio. And profit margins are exploding, and I don't see them going to go anywhere but stay strong. One of the big cost line items has always been oil, especially in West Africa and those mines, and oil's at all-time lows. So that's not going to be a big expense line item. So I think they're going to continue to be, and they're way behind. The supply of new ounces of gold coming on stream is not keeping up with what that demand is. So here's GLD is now 143 billion. It's gone up from 50 billion, and QQQ is 388 billion, and SPY is 671 billion. Ralph, you were commenting on this earlier, showing just the tech stocks, these comparisons.
Yeah. I mean, I think gold bullion was going to eventually, should eventually trump this, perhaps. We'll see. But I mean, if the market's going down, that's not good for anything. So, And typically, when we've had good markets in gold, we've also had good markets in bullion, but inflation tends to chip away at their equity returns a little bit more.
So we love the royalty companies, and that's what we created GoAU for, was to focus on the royalty companies. I know that Fidelity's, some of their generalists end up owning not mid-cap junior or junior mining companies or Newmont. They just buy Franco and Wheaton because they have royalties and a bunch of juniors. That's what the generalists have told me at conferences. So you can see that the royalty companies, one of the big factors I noticed was Newmont. The average revenue per employee is 840,000, but Franco-Nevada has a royalty on those assets, and they have $32 million of revenue per employee. So the high revenue is a very important indicator. If you look at those tech stocks that Ralph was talking about earlier, NVIDIA has the highest at 3.5 million of revenue per employee. Apple's 2.5 million. But you think of that, Franco-Nevada is 32 million and Wheaton Precious is 39 million in revenue per employee. That allows them tremendous flexibility to maneuver around. And Franco, it took it on the chin on the is it the Cobra asset in Panama?
Yeah, Cobra Panama. Yes.
And they wrote all that off, and rumors are that it could come back on, and that would be a big game changer in revenue and cash flow for them, wouldn't it, Ralph?
Yeah. Oh,
that royalty comes back on.
That is, yeah, that's their most significant asset.
See, this is what's really important for investors in these. The gold's not going to wear away. It's not going to deteriorate. It's not going to, like bananas are or clothes.
Yeah.
And a royalty is a royalty, so that royalty stays on. That streaming is there, so it may go dormant like it has, but when it'll come back on, and when it comes back on, you'll get a big re-rating in Franco. So Franco-Nevada went public in '83. It was the first investment banking deal I ever did, not knowing what I was doing, not knowing what it would become, but betting on Seymour Schulich and Pierre Lassonde. And then it was taken over by Newmont, and then it was spun out in 2008. And I always wanted to compare it to Berkshire Hathaway because Seymour Schulich always compared himself to Berkshire Hathaway. And as you can see, it's outperformed. It's done a great job. I've always recommended a 10% weighting in gold with half in physical bullion and the other half in high quality gold mining stocks, the golden rule. And Ray Dalio, with the largest hedge fund in the world, is having 10 to 15% for his parity trading in gold. So I think that a lot of that money you saw this summer that was going into was funds like himself, parity trading, go long the gold. Thank you, everyone, for coming on. I hope you recognize that the debt, the global debt is $337 trillion, and MMT is not going away. So when you add that on and you say, well, what portion of that is relative to GDP? Global debt is 2.5 times GDP. America, which everyone likes to complain about, is 140. So actually America on that debt to GDP is less than the world. And when we look at the rest of the world, we're going to see this continuous currency devaluation. And the difference is money is being spent on military. We have gone from a 180 globalization, open borders all through Europe and along Texas and California to now closed borders and trying to protect the cultures and deal with cyber attacks. The cyber attacks this week were F5. Jaguar was shut down for a month in the UK because the UK badmouthed Russia, so they go and send in to shut down their facilities. Heathrow Airport was shut down for a couple of days. So cyber attacks, so a lot of this funding by governments, what we're seeing is NATO spending has gone up dramatically, and it's really trying to get caught up with what China has been spending on hydroelectricity themselves and data centers and weapons. So now the Chinese have more Coast Guard and battleships in America. They have 5 icebreakers. They don't have ice. because they're believing the Arctic Circle going through the Arctic, they have the rights to the going through the Arctic. So we have these dimensions of trade and land positioning around the world, and other countries are now becoming fearful, and the money printing is a lot to go into security. And so that's a big difference that we see. And hopefully that no missiles do get launched all over the world, and people build enough walls to feel safer again and protect their cultures. But that's what we're into right now with the money printing. You got to be long gold. Supply's not going to come on fast. So the gold stocks are in a wonderful position for high margins. Stay tuned. If you're not long, you'll be wrong.
Yep. Thank you.